Very good afternoon to one present here. I request the chairman of SIRC, Shri C.A. Jomon K. George, to please accompany our honorable speakers for the day to the dais, C.A. Bhanushekhar sir and C.A. A.K. Narayan sir. Vaidishwaran sir will be joining us soon. Please give a huge round of applause. I request all the delegates to please stand for the ICA motto song.
Yaesha sukteshu jagrati Yaesha sukteshu jagrati Kamam 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 Pursho nirvimana Tadeva shukram Tadeva Brahma Tadeva Mritamujjate Tasmin lokaha Shataha Sarve tanuna Sarvitascha Etadvaita
Thank you. With great pleasure, I welcome all the delegates here today to the session on the Union Budget. Usually it is an annual session that is hosted by the ICAI. This time we have it biannually by virtue of the elections. And we had a budget which was presented today by the Honorable Finance Minister, Nirmala Sitharaman Madam. And it was probably the longest budget that has been presented in the history of India. So we saw a lot of announcements. It's an interesting budget, if I have to word it that way. We have the experts who will take you through the specifics of the point. But it's fair to say there has been some sense of disappointment from the budget. Maybe in some sections of the society there is happiness. As they always say, the budget, you cannot please everybody. There is bound to be some disappointment. And I'm reminded of a very funny story, where there will be 3 people working in the office and the owner tells the junior, please answer the phones. So the junior answers the phone and he tells his other colleague, Arjun, your cat died. So immediately Arjun is very disturbed and he leaves. So the owner then calls this junior to his office. He says, look, this is not how you should tell bad news. There is a way of communicating. First you have to say, Arjun, we got a call. Your cat is jumping and playing on the roof. Like that you have to say. Then you say, after some time, Arjun, your cat is on the edge of the roof, it seems. I got a call. Then later you say, Arjun, we just got a call. The cat fell off the roof. They're rushing it to the hospital. Like that. And then finally you say, Arjun, sorry, your cat died. But by that time the person will be ready for it. He'll be ready for it. So next day, again one call will come. This gentleman, he'll pick up the phone. He'll be very disturbed, very upset. The owner will call him, please come to my room. What happened to you? Sir, no sir, I can't tell. No, please tell me, ma, you have to tell me. I taught you so much. So it's very difficult for me to tell. No, come on, tell me, what is it? Sir, your mother is playing on the roof, sir, like that he will tell. So it is not, you cannot appropriate all the opinions and you cannot appease everybody with the same results. The budget is a lot like that. And we have very respected speakers today. We know Bhanushekhar sir is of course the doyen of our direct tax programs. Without him, these budget analysis sessions never happen. In his very inimitable style, he will take us through the direct tax provisions. We have Vaidishwaran sir will be joining for the indirect tax provisions, and we have A.K. Narayan sir on the economic aspect. Today we saw a lot of economic aspects discussed in the budget, and he will be taking us through the current scenario of the economy, and that will be very interesting as well. So before we proceed with the next task, we have our very dynamic chairman, Shri Jomon K. George, who is from Cochin, but he has strong connections to Chennai. He did his articleship here, and he always strives to make sure his presence is there in all important meetings. In fact, just now, he has travelled all the way from Vizag. As soon as he heard the budget meeting was happening at this time, he said, I want to be there. I'll make sure I'm joining the session, and he has come all the way here. And I request our chairman of SIRC, Shri Jomon K. George, to provide the chairman's address for the day.
Good evening to all of you. My colleague in the Regional Council, Abhishek Murli, two of the learned speakers who would enlighten us on the fine aspects of the budget, the details of it, specifics of it. My very dear friend and old friend, C. Bhanu Shekhar, and Narayan sir, past chairman of SIRC, is also a tax expert. Velkumar sir from Tirupati, respected senior members, colleagues and friends. I'm very happy to stand before you on this budget analysis evening, July 5th. We are going on with the Platinum Jubilee celebrations of the Institute. Starting on 1st July, we were here, started with the early morning walkathon. We had a blood donation camp. We had orientation programs, motivational program for students, reach out programs as part of our, we don't call it CSR, it's called PSR, Professional Social Responsibility, and also career counseling. We had a lot of programs. So with today's budget analysis, I think that week-long program will come to an end. And we had the budget presented this morning. I was in Vizag. We had the first sub-regional conference happening at Vizag, organized by the 12 branches in Andhra Pradesh. And there was a very good participation, good interaction, and a lot of faculty. I think Malishar sir is also going there tomorrow morning. Since meeting a large number of members, 4 months after we took charge on February 22nd, what has been done at SIRC, the promise was to make SIRC more intuitive, responsive and resurgent. And while we were on that track, the SSP initiative of the Institute, as all of you know, the Institute is on a very strong digital drive, moving to a completely paperless, impersonal, system-driven kind of an environment. And last 10 days, I think the office here is busy returning the hard copies, which has been sent by members, not knowing that SSP has fallen in place. SSP is a self-service portal. I hope all of you have registered on the SSP portal, SS portal rather, self-service portal. Go into the website of the Institute, there's a scroll, you have to start there, get login and get registered. Hereafter there will not be any physical communication about students, about the Form 18s, all the forms that we file, payment of fees. There are some hiccups. It's a major, huge IT transition that the Institute is doing. It's a very revolutionary initiative, I would say, but then there are a lot of hiccups. It's done by TCS. Some of you would recall there was earlier a project Parivartan, which could not fully accomplish its objective. So that was stalled, and this was underway for quite some time. As we are deliberating here this evening today, the entire TCS team and officers from all the regions, including our southern region, 2-3 of them are there. They are working on, troubleshooting, as they say in the IT. This thing they say, so they are improving the facility. Once that settles in, it will be a completely revolutionary IT environment where we will be sailing through. So those who have not, I was interacting with some of the members in Vizag yesterday late evening, and many of them have not informed about the SSP. So do not send any more hard copies. Once that settles in, coming back to SIRC, we are doing to have dedicated lines, and depending on how SSP is going to work, because I think the human intervention, as the finance minister made a speech in the budget speech, it will be impersonal, like human intervention will be very minimal, it will be system driven. So please be aware of that. One more thing incidental, though it is not related to the topic of this evening, is about the UDIN, the Unique Document Identification Number, which from 1st July is mandatory for all the attestations that we do, including audits, tax audits, certifications. Wherever our name is associated, we are supposed to do that. So, as on date, there are about 40,000 chartered accountants who have not registered on the UDIN portal. Of the 130,000 plus practicing members, about 35-40 are still, exact number I do not have. It is available, it can be traced. So, since I came straight from the airport, I could not verify that. So, those who are not registered on the UDIN portal, please do, because UDIN is a very, I would say, another very major initiative by the Professional Development Committee. There has been a lot of fake certifications by non-chartered accountants as CS, a lot of wrong validations done by non-CS, and some of our friends, unfortunately to say, in MFSL areas, when I address members in MFSL areas, there has been some amount of resistance on UDIN, because UDIN is going to discipline the professional functioning, and the UDIN is Institute's way of saying that do things that you are supposed to do in the right fashion. If that happens, then we are there, we'll handhold you. But otherwise, if you're not there, you're going to have a problem. A lot of issues are going to happen, and bankers, all the interested groups, IBA, RBI, SEBI, all of them are being informed about. So there is a new move whereby the end users today would insist on UDIN if it's certification by a chartered accountant. So that's a very important initiative. So please do, if you have not done so far, go on. And again, there's a lock after 60 tax audits you sign. So individual partners will have to take, you are a large multi-partner firm. Even if internally you decide to have one partner would sign all the balance sheets, I mean all tax audit reports after 60. I'm told, I don't know whether that has really fallen into effect, but after the 60 it would lock. After that, not be able to attest the tax audit forms, other than of course the 44 ADA cases. So a lot of initiatives are being taken. So I think the Platinum Jubilee year, 70 years in the history of any institution, is a long period. But today we got a lot of things to be complacent and happy about, including the latest recognition by the Union government on ICAI's contribution as being a very effective and contributing partner in the GST transition, which is the most revolutionary tax reform the whole world has seen in the last many years. Therefore, that's all being recognized. But at the same time, there are certain backlashes, audit resignations in the corporate, audit resignations in the corporate space, and a lot of changes are happening. And also that some backlashes in the form of some auditors deviating from the path of rightness and so on. But that we set aside, move forward with a fresh resolve and a fresh guard into the future. Welcome to Vaidishan sir, please sir. I think we need to make a fresh resolve and move forward with fresh guard, with a fresh to stick and adhere to the highest standards of probity, professionalism, and governance. Compliance with standards are also very important. So with that note, I would conclude once again, thanking and welcoming all the three speakers here, and welcoming each one of you. And once the SST settles in, we are all here. In every newsletter, we are making available the access, the phone numbers and the email ID. So keep in touch with us, get back to us with all that you need to do. So with that, let me conclude, handing over the proceedings to Abhishek. Thank you very much.
Before we proceed with the sessions, I request the chairman of the SIRC to present a token to our guests in the form of a shawl, and please honor the guests with a shawl. Request the chairman to first honor T. Bhanushekar sir. Now we will honor Shri Advocate Vaidiswaran sir. I request the chairman now to honor the speaker, C.A. A.K. Narayan sir. Our first session will be on the amendments brought about through the budget for direct taxes. We have C.A. T. Bhanushekar sir. He's a tall person and an even more towering personality. And now I will read out his profile in brief. He joined in practice in the year as partner as 1994, and he's been practicing since then. He regularly contributes articles for direct tax, international taxation to several tax journals, including Consolidated Commercial Digest, Taxman, Tax Referencer, Income Tax Review, and BCS. He argued in a number of landmark cases, having practicing in the ITA team myself. I have the benefit of listening to his arguments, very beautiful, in a crisp manner. It's just very enjoyable listening to him argue the case. It's like a story the way he argues it, and his style is very unique. He's argued in various reported judgments that have both national and domestic international presence. Ford India Limited, Saxoff Limited, SPSC, SSI relating to ESOP taxation, Vijaya Productions, Apollo Hospitals, Eastman Exports, Filtrix Technologies regarding disallowance of 40 AIA, and Platix. List goes on. He is also the author of the Handbook of Assessment Procedure under Income Tax and Search Assessment under Income Tax Act. He is a formerly visiting faculty of the CA Institute, and he continues to lecture in various forums. In fact, tomorrow also he is traveling to Vizag to address our members, and he is still a very, very active personality both in chambers of commerce and various institutes, including the other institutes as well. He delivers lectures and presented papers on direct tax and international taxation on seminars, meetings, workshops, and conferences at the ICI, SIRC, Central Council, and various organizations. Actively participated as a trustee in brain trust sessions organized by branches of the ICI. He participated in training programs for CIT conducted by the regional training institutes of the Income Tax Department and also the Central Training Institute. He is presently the chairman of the Direct Tax Committee of the HCC, and he was formerly a columnist in the Hindu Business Line, in the personal finance page that featured on Sundays, and also authoring the column called Tax Talk. He is a former member of the Southern India Regional Council, and he was Regional Council member for the period 2001 to 2004, and the past chairman of the Fiscal Laws Committee. Presently, he is a special invitee of the Direct Tax Committee of the ICI in Delhi, and he is someone who actually needs no introduction, but I had to formally introduce him. He's really an amazing person, and we're really looking forward to hearing him today. Thank you so much for taking time out of your busy schedule and addressing us today, sir. So please give him a very, very warm round of applause.
First for the chairman and other regional council members, my fellow speakers, respected elders and other friends. First of all, thank you, Abhishek, for the introduction. Most of it was what I have written, but many of these were past in the sense that it apparently appears that it was an older CV than what is the latest one. It doesn't matter in any case. Some of these were past achievements, past glories, whatever you may call it. Well, the finance minister when she spoke about on the budget, or when she revealed the budget, spoke about various economic aspects and then came to taxation and started off with the direct tax proposals. Two things were quite startling. One was the figures which the finance minister said, where she said that the total collections up to financial year 13-14 was 6.38 lakh crores, and in financial year 18-19 is 11.37 lakh crores. So that is almost close to double. It looks quite perplexing that the economy has not grown at that rate, but collections have grown at that rate. Is there something wrong? When the economy doesn't grow at a particular rate, but collections grow at a particular rate, is it because of various measures which should not be taken, which are being taken? Is a doubt that comes to one's mind. And she also referred to one other statistic. In fact, Vaidishwaran and I were speaking just before we came over telephone, as we were driving down. And one other statistic that she revealed was with regard to the companies where she is proposing to reduce the rate of tax to 25% in respect of companies with a turnover of up to 400 crores, and said that covers 99.3% of the companies. It is quite surprising to realize that only 0.7% of the companies have a turnover in excess of 400 crore. In fact, it was, I don't know whether the finance minister, in fact the doubt is whether the finance minister got the numbers right. But in any case, that's how it is. Incidentally, I have tried to divide what to the extent possible between corporate tax and personal tax, talking about personal tax first. Interestingly, she said that the richer people will have to pay higher taxes and talked about increasing the surcharge. I don't know how many of us got it right. She said that there will be an increase in surcharge, which will effectively mean that people having an income above 2 crore will have to pay a surcharge which will be an incremental tax of 3%. And people having an income above 5 crore will have an incremental tax liability of 7%. Now all of us will remember that the surcharge was 10% and 15%. Above 50 lakhs and above 5 lakhs, 50 lakhs and up to 1 crore was 10%. Above 1 crore was and up to 2 crores is now 15%, which was the figure earlier. Now they are increasing 2 more surcharge slabs, 2 crore to 5 crore at 25% and above 5 crore at 37%, which makes the effective surcharge around 11.1%. So which means the person pays roughly about 41.1% as the tax, which effectively means we are going back to the olden days of increasing the tax rates, though in the form of a surcharge. In fact, those days when I was a student of chartered accountancy, when we used to attend the speech of the Palkiwala then, he used to say that surcharge is nothing but a fraud by the center on the state. It is not my state. That is because it doesn't have to be shared with the state. And incidentally, this increase in rate is only for individuals and HUFs and AOPs, BOIs, etc. That is the non-incorporated companies. Now for a company you will see that the rate remains 30% or as the case may be 25%. So there is a marginal reduction in certain cases for corporates, while for individuals, HUFs, it is being increased. There seems to be no logic at it, but then in fairness, if the rate is to increase, it should have increased across the board. Or it should have reduced across the board. Unfortunately, for individuals, HUFs, etc., it is on the increasing trend, while for others it is not. Of course, the law also provides for a margin relief, whereby it clearly provides that the incremental tax shall not exceed the incremental income, because there is a possibility that my income may go up, say from 4 crore, say from just above 5 crore, say 5 crore and 100. Then if my surcharge becomes 37% from 25%, my tax will be more than the 100 rupee income. Therefore, they are restricting or pegging the incremental tax to the incremental income. There are some changes made in 12AA. In fact, I could hardly understand why this change or how can this change happen. This, I don't know whether to call this procedural, individual, anything you may call it, but in 12AA there is a very serious amendment that is proposed, where they say that the principal commissioner or commissioner can satisfy himself about the genuineness of the activities and also with the compliance to any other requirements in any other law. Any other requirements in any other law, which means that the PCIT now will examine not only the compliance with the provisions of the Income Tax Act, but also with reference to other laws. Now, one thing I fail to understand, if the PCIT itself decides that you have violated the other law, what will the authority under the other law do? If he decides there is no violation, and if the PCIT decides there is a violation, whose word is the better word? Will become an issue. In fact, there is a recent decision of the Madras High Court in a case called Cholamandalam Insurance, where the Madras High Court, the Chennai Tribunal took a view that reinsurance is not at all permissible, and therefore any amount paid towards reinsurance is violative of 37(1) by virtue of the explanation 37(1), which says any expenditure incurred for a purpose which is an offence or prohibited by law will not be allowed as a deduction. The Madras High Court reversed the decision of the Chennai Tribunal and also observed, they are saying that if somebody has violated a law, it is not for the income tax authorities or for the tribunal to decide so. The Income Tax Appellate Tribunal will restrict itself to adjudicating income tax matters, not to adjudicating matters which are outside the scope of the tribunal, the Income Tax Tribunal itself. And therefore, the Madras High Court reversed the Chennai Tribunalization and remitted the matter back to the Chennai Tribunal. Interestingly now, there is statutory sanction that is being accorded to this by saying that the PCIT can look into whether he has complied with all other laws as well. And this is for the purpose of seeking registration. And And interestingly, they also provide for cancelling registration. In a case where the commissioner comes to a conclusion that there is a violation of any other law, and if that order has reached finality. So even in the course of assessments, if somebody comes to a conclusion that there is a violation of any other law or an infraction of any other law by the charitable institution or trust, then if that order reaches finality, the commissioner has got the power to cancel. Now this becomes even more tricky in the case of many colleges and institutions where they have collected what we call capitation fee. Now wherever they have collected capitation fee, assuming that the trust, they go to the settlement commission. Settlement commission agrees to the income being offered and being taxed, but still the cancellation of the registration will be a next problem. Now cancellation of a registration in case of an educational institution can be even more trickier, because there is a possibility that the government may say we will take over the institution in such a case, because the law relating to the institution requires that they should be a registered charitable trust or institution. That is another aspect. Of course, 54 GB, the finance minister spoke about it. Honestly, there was not much to it, which I thought can be ignored. You have two new sections, 80 EEA and EEB in respect of individuals. EEA being in respect of interest on housing loan up to 1.5 lakhs, which is taken from a financial institution and sanctioned on or after 1/4/19 and up to 31/3/20. And where it requires that the guideline value, that is a stamp duty value, is less than or equal to 45 lakhs. And also that the assessee should not be owning any other residential house on the date of sanction. In which case the housing loan interest is allowed as a reduction of up to 5 lakhs under 80 EEA independently. This will be, in my understanding, independent of the deduction that one will claim under section 24. Which means that if it is a self-occupied property, I claim under section 24, I could probably claim here also. But then we will have to see whether it will exceed the specified limits. 80 EEB, again with respect to individuals, with respect to purchase of electric vehicle. Interestingly, I was reading the definition of electric vehicle. It says electric vehicle means a vehicle which is powered exclusively by an electric motor, whose traction energy is supplied exclusively by a traction battery installed in the vehicle and has such electric regeneratable braking system, which during braking provides for conversion of the vehicle to kinetic energy for the conversion of vehicle kinetic energy into electrical energy. I really don't know whether a layman, an individual is going to understand whether his vehicle works like this, but it doesn't refer to a distinction between a two-wheeler and a four-wheeler. So whether you are purchasing a two-wheeler or a four-wheeler, so long as you satisfy this one condition, how you are going to decide whether you satisfy the condition is a larger question. You probably get the deduction which the finance minister promised and said over the life of the vehicle you will get 2.5 lakhs as tax saving, etc. And again, the loan should be between 1/4/19 and 31/3/23 and up to 1.5 lakhs being the basic amount of interest that can be claimed as a deduction. Now this is so far as the taxes relating to personal tax are concerned. Now going on to some of the aspects relating to corporates, the first aspect is with regard to the reduction in tax rate, which I referred to a little earlier as well. Now they clearly refer to the turnover of gross receipts not exceeding 400 crore in the previous year 17-18. Then the tax rate for the company for the year 18-19 or for the current year, that is for the assessment for the year 19-20, that is for assessment year 2021, should be 25% as against 30%, which will be the rate for others. There is no proposal to increase the surcharge in respect of corporate entities. That proposal is only in respect of non-corporate entities. You have 219 AA being amended. 219 AA, they are trying to bring it in sync with the Ind AS, where they say that in respect of demergers, the assets and liabilities need not be recorded at book value, provided they are recorded in the values as per the Ind AS requirements. and still it will be compliant with 219AA. There is also a very major change, a very important change proposed in the context of 40A1. Now all of us friends will recall that in the context of 40A1A, there is an amendment in section 201 which provides that if the payee has remitted the tax and filed the return, then the date on which the return has been filed by the payee will be treated as the date on which the payer has made the payment of the taxes, though taxes have not been deducted or remitted by the payer. And consequently, in that year in which the return is filed by a payee, the deduction will be allowed in respect of whatever disallowance has been made in an earlier year under 40A1. Likewise, 200 also provides that the SC will not be treated as deemed to be in default, provided the return is filed by the payee, chartered accountant certificate is available, etc. These two are clearly provided for in 200 and 40A1A in respect of payments made to persons being residents of India. They are proposing to extend this and amend 201 and as also 40A1 to provide that there will be no reference to a resident in 201, which means even if the payment is made to a non-resident and the non-resident has remitted the amount in the government account, there will be no disallowance that will be warranted under 40A1, and likewise the SC will not be deemed to be in default under section 201. Now interestingly, this can lead to two other confusions. There are at least four decisions: the decision of the Allahabad High Court, the decision of the Karnataka High Court, and as also the Agra Bench of Tribunal, where the High Courts and the Tribunal have held that the responsibility to show that the payee has not remitted the taxes is on the revenue and not on the assessee. The responsibility to show that the payments have not been remitted by the payee, the TDS or the tax has not been remitted by the payee as yet, is on the payee and not on the payer, because the payer has no powers under the Income Tax Act. Whereas the assessing officer has all the powers in the Income Tax Act, so he can use his powers to examine whether this has actually been paid or not paid. So this can lead to one other small aspect. In respect of non-residents, it can become more difficult for a resident to demonstrate that the payee, the non-resident, has paid the taxes and has filed the return. It's an outside chance that they may have paid the taxes and filed the return. But still, if they have, then there is a possibility that we are not going to be treated as a C in default and also not going to have a disallowance under 40A1. Therefore, it has to be demonstrated. Then the question is, who has to? I would think the same decisions should still apply even in the context of non-residents, and the burden should lie on the revenue and not on the assessee. Likewise, of course, not concerning this budget at all, there is one other aspect which I found which can be very interesting. There is a circular number 3 of 2015 where the circular number 3 of 2015, the board has clarified that the disallowance under 40A1 has to be restricted to the income component in the payment and not to the whole of the payment under 40A1. In other words, if I make a payment of say 1,000 rupees to a non-resident, the assessing officer, the board circular says, is duty bound to determine the income comprised in the 1,000 rupees. Treat the assessee as an assessee in default only in respect of that income under 201 and seek to make a disallowance only in respect of that amount of income comprised in the payment under 40A1. This is a very interesting instruction which has been issued by the, or a circular issued by the board. Of course, that stands unaltered even today. So even assuming a disallowance would operate, it should operate only in respect to the income. In fact, the board circular very clearly says the officer should determine the income and make the disallowance only in respect of that income. There are amendments made in respect of NBFCs, which was also spoken about. There are two amendments that are sought to be made in respect of NBFCs. One is by amending section 43B and the other is by amending 43D. And as far as 43B is concerned, they are seeking to extend the framework of 43B to make a disallowance in respect of interest paid to NBFCs also, only
unless it is actually paid in the previous year. What will apply to financial institutions or to scheduled banks will now apply to NBFCs also. So if interest is not paid within the, it will not be allowed as a deduction under 43B. Of course, you could pay it before the due date for filing the return and claim it in the previous year. Otherwise, it will be allowed in the previous year of payment. They are also seeking to amend the 43D. Now, 43D is hitherto available to public financial institutions and certain public companies, where the income can be recognized on receipt basis as against on accrual basis. This is provided for in 43D. Now, they are seeking to expand the scope of 43D to NBFCs also, which means NBFCs which have NPAs, non-performing assets, the interest on NPAs can be offered technically on cash basis. Of course, the 43D is worded in such a way that it says and on receipt or at the time when it is credited to the P&L. So if you seek to credit to P&L, it will automatically have to be offered in that year. But if you are otherwise not crediting to P&L, it says it should be offered in the year in which it is received. But be that as it may, even prior to all this, there are decisions starting from the decision of Supreme Court in a case called KCIM Investments, the Madras High Court in LG Finance and all of it, where the courts have held that in respect of NPAs, even in respect of NBFCs, wherever the interest has not been received, it need not be offered to taxation. Now, if that is the correct position, then there should have been no difficulty, but then the difficulty comes because of the ICDS in between. The ICDS mandates that accrual basis must be followed. So, which means the decisions in KCIM or KICM or for that matter LG Finance is no longer good law post the ICDS. And consequently, income will have to be accrued. Of course, there have been very many questions there itself, whereas Caesar said, can I accrue it and write it off as bad debt? I have my own apprehensions there. You can write it off as bad debt, but then the question as to whether somebody can do it in the same year, because the accounting standard says unless there is reasonable certainty, you should not account. So I have accounted for the income on the basis of ICDS or whatever be the reason. So on the one hand, I am talking about reasonable certainty. On the other hand, I write it off. It looks a little awkward to me, but maybe in the first year you will suffer. From the next year onwards, earlier year you can keep writing off at least. That much can be done. Lot was talked about section 79. In fact, I spent the maximum time there to understand that there was nothing. See, all of us know section 79, which applies to a closely held company. And section 79, which applies to a closely held company, simply provides that if there is a change in shareholding pattern to the extent of 51% or more, in comparison between the year of loss and in comparison between the year in which you are seeking to set off the losses, then if there is a change in shareholding pattern to the extent of 51% or more, the benefit of set off will not be available. Section 79 was amended to provide that in respect of eligible startups, 100% of the shareholders must continue as shareholders in comparison between the year of loss and the year of claim of set off. Now they have relaxed it in respect of eligible startups to say you satisfy any one of the conditions, which means either 51% should continue or 100% should continue. Either that's how the amendment reads. See, it took me quite some time to understand. They said either class A or class B. I read class A says 51%. You read class B says 100%. Now if you satisfy any one, they could have simply removed the second class. It would have been as elementary as that. If they had deleted that, that would have been the effect. But then the confusion continues and there is some amount of difficulty in understanding that. Talking about eligible housing, one aspect is with regard to providing the deduction under section 80 for the individual who is taking the loan, but they are also seeking to amend section 80 IBA. 80 IBA as it stands now allows for certain deduction in respect of certain small housing projects. They are seeking to slightly expand the scope to say that if it is approved on or after 1/9/2019, then if the area of the land is not less than 1000 square meters in Bangalore, Delhi, Chennai, Hyderabad, Calcutta or Mumbai, or 2000 square meters in other areas, and if the construction does not exceed 60 square meters in these places and 90 square meters in other places, and also where the stamp duty value does not exceed 45 lakhs, and further the project should utilize 90% of the floor area in ratio and 80% of the floor area in ratio depending on the place where the property is located, then 100% will be allowed as a deduction. In fact, if you go back to 80IB where this started eligible housing projects, I am very sure there is not a single SSE who has got the 80IB without litigation. To my knowledge, any builder I know, excepting of one or two of them whose cases were not taken for scrutiny, every single person had the 80IB question. I am sure that will happen in the context of 80IBA as well. So professional opportunities will keep increasing. That's one side of it. There are small amendments made with regard to transfer pricing and also with regard to 115JB. 115JB, not much, except to say that in respect of companies which are governed by the insolvency and bankruptcy code, the law presently provides that the aggregate of unabsorbed depreciation and business loss can be reduced in computing the book profit. Now they are seeking to extend this to certain companies which go under the NCLT, where the government requires that the board of directors should be changed by the company. Of course, there are small amendments with regard to transfer pricing, but one major amendment with regard to transfer pricing is to talk about the secondary adjustment. Now, the law in 92D provides for what is called a secondary adjustment when there is a transfer pricing adjustment proposed or made by the assessing officer. And this talks of something like this. Let us say there is an adjustment that is proposed by the transfer pricing officer of say 10 crores. Then the concerned associated enterprise must repatriate the 10 crore to India, to the Indian enterprise, the associated enterprise, after the order reaches finality. If they do not, transfer the 10 crores, that will be deemed to be an interest-free advance given by the Indian enterprise to the foreign enterprise. Now they are seeking to make an amendment in that to provide that if the Indian enterprise seeks to pay a tax at 18% as increased by a 12% surcharge, no secondary adjustment needs to be made. Please note that the secondary adjustment will be made year after year. Now in my understanding, post 92D, if an Indian enterprise seeks to pay the 18% plus 12% surcharge, then there will be no requirement at all. There will be no requirement at all to make the secondary adjustment in any year. That's how logically it has to turn out to be, because otherwise it cannot be only for 1 year, because the tax rate is also pretty steep. 18% plus 12% surcharge is quite steep. Coming to some of the procedural amendments, they are seeking to make procedural amendments by amending section 139(1), requiring certain assessees to file a return even though they otherwise are not required to file a return. That is, assessees who have deposited 1 crore or more in a current account or one or more current accounts with a bank, including a cooperative bank. So the onus is on me as the taxpayer to file the return. So it is not with reference to one bank or one cooperative bank, etc. If I have maintained 10 current accounts and if the aggregate exceeds 1 crore, I still would be required to file a return, even though otherwise I may not have to, because I have earned the loss or whatever be the reason. Expenditure incurred on foreign travel, either on himself or on any other person exceeding 2.5 lakh. Expenditure greater than 1 lakh towards electricity or such other items that may be prescribed is what they are talking about. Somewhere I find some kind of a dichotomy. For foreign travel 2.5 lakhs, for electricity 1 lakh. 1 lakh seems to be a steep figure, while 2.5 lakhs seems to be a very small number. Likewise, if you see 1 crore in one or more current accounts seems to be fairly a steep number. I don't know how that works. Incidentally, they are also mandating that assessees who are claiming the series of exemptions under section 54, whether it be under 54, 54F, 54B, whatever it be, that whole series of 54 will be required to file their return to claim the exemption within the time stipulated under 139(1). Within the time stipulated under 139(1). This could also be very tricky. Of course, the finance minister spoke much about linking Aadhaar and PAN, but what was not said is, if you don't link the PAN and the Aadhaar, you can substitute the Aadhaar for the PAN. But if you are using the PAN, you must link it to the Aadhaar. And the law provides that if you don't link it to the PAN, then the PAN will get invalidated. So which means you have to use only the Aadhaar then. But then interestingly, it looks easier to get the PAN than the Aadhaar itself. Of course, you have amendment in 194IA with regard to TDS. Now this 50 lakh limit with regard to immovable property and a TDS of 1%. Now they say will include not merely the value of the immovable property, but will also include the club membership fee, the car parking fee, electricity and water facility, maintenance fee, advance fee or any other fee of similar nature. Everything seemed okay to me, but that maintenance fee mostly is paid monthly. It is not paid upfront in most of the cases to the builder. Normally what they should be referring to so far as TDS is concerned is the upfront fee that is paid to the builder. Because it is there where I purchase the car park area, I purchase electricity, etc., etc. And therefore it is to my understanding perfect to add all that. Why maintenance fee I was not able to understand, but that's how it has been amended. 194M is sought to be inserted, whereby there will be a 5% TDS or by individuals and HUFs where there is payments of the nature referred to in 194C or J, and where the payment exceeds 50 lakh, and the individual or HUF, like in 194IA, not required to file any annual reports or statements. 203A will not apply to these people. Of course, 197 is correspondingly amended to provide that in a case governed by 194M, there is a possibility for applying and obtaining a lower deduction certificate. The finance minister also spoke about a new section being inserted in respect of cash withdrawal. There if you see, it says a bank or a cooperative bank where it pays an amount exceeding 1 crore to any person should deduct tax at source at 2%. See, I am a bank, I am paying 2 crore to you, an amount exceeding 1 crore to you, sorry, I am paying say 2 crore to you. I am supposed to deduct tax at 2%, which means I should deduct and give you a lesser amount, even at that time. And this applies where it exceeds 1 crore. So what happens is, in my understanding, up to 1 crore there will be no TDS. But the minute you draw that next, say 10,000 rupees, on the entire 1 crore and odd, TDS will have to be deducted now at 2%. Which means you may go to the bank and end up coming back having to pay the bank some amount so that he will be able to comply with the TDS required. But then please remember that this is just a TDS provision, which simply means that there is no difficulty in claiming credit for the same at a later point. This apparently looks to be some kind of a mechanism by which they can track all the payments that are, or the sums that are withdrawn from the bank, because there are many cases where even the 285BA does not capture. So in order to ensure that that is captured, probably they are trying to bring up certain payments, say certain TDS provisions, so that there is little difficulty. There is an amendment proposed in 270A. Now 270A is probably a section which we are going to have to grapple with this time barring assessment. I will just take 2 minutes to explain what 270A is, because unlike the old 271(1)(c), which is a penalty for concealment or furnishing of inaccurate particulars, 270A is on a completely different footing, in the sense that 270A seeks to be in the form of what I call a variance penalty, in the sense that if in the present regime up to assessment year 16-17, where 271(1)(c) is applicable, if an addition is made by the assessing officer, unless that addition has been a result of concealment or furnishing of inaccurate particulars by an assessee, no penalty is leviable. But with the coming into effect of 270A with effect from assessment year 17-18, one will have to notice that if a difference is there between your 143(1)(a) income and your assessed income, or your reassessed income vis-a-vis an earlier assessed income, then automatically there is an underreporting of income. There is an underreporting of income the minute there is a variance. The minute there is a variance between the two, there is an underreporting of income. Of course, subsection 6 of 270A says the following will be exceptions. So, if one does not fall within the exceptions contemplated by subsection 6, it's not as though subsection 6 is so simple that will allow the case the issue in every case. So even simple, straightforward cases can be hit by 270 capital A, where penalty would be exigible. Of course, there is 270AA, which permits the assessing officer to give immunity where there is underreporting of income. Of course, 270A also has something called misreporting of income. The penalty for underreporting being 50%, the penalty for misreporting being 200% of the tax, which means it is 15%, or as the case may be, 60%. If you fall within slab rates, your surcharge goes up, etc., everything goes up automatically. Now, be that as it may, 270A talks of what you call as a variance penalty. There are a number of issues which arise in the context of 270A, where the law seems to be extremely ambiguous. Whether penalty can or cannot, will or should not be imposed, when and how immunity can be granted under 270AA, etc. Lot of clarity is lacking in the context of 270A. On what figures it should be computed is also not clear in certain circumstances. Now, one of the issues where there was a controversy or a difficulty was what happens if an assessee files a return for the first time in response to a notice under 148. Rightly or wrongly, 270A did not provide for the amount that is returned by the assessee under 148 to be deemed to be an income which is underreported. If you see 271(1)(c), it very clearly provides in explanation 3 that it will be deemed to be concealed income. So if I don't file a return and file my return for the first time in response to a notice under 148, and I return my entire income and assume that my returned income is taken as the assessed income, then by virtue of explanation 3, the whole of the income that I returned in response to the notice under 148 becomes concealed income. Unfortunately, there was no corresponding provision in 270AA, and consequently probably one could have argued that penalty is not exigible at all in such circumstances. Now they are seeking to plug this loophole even with effect from assessment year 17-18 to provide that penalty will be leviable in such cases, and the entire amount which is shown as the income in the return will be deemed to have been underreported. Now again, this causes a little more confusion in my mind. Let us understand that there is nothing in 270A which talks about something called misreporting being a separate, aspect of an addition made. Every addition made will result in underreporting. And some underreportings will be misreporting. In other words, misreporting is a part of underreporting, which means every underreporting is not a misreporting, but every misreporting is definitely an underreporting. So there is no difficulty in understanding 270A to say that every misreporting will result in an underreporting. Now in the context of 270A, there seems to be one difficulty. There is no satisfaction required on the part of the assessing officer unlike 271 See, as I said, only if you are falling under the exception in subsection 6, there is a satisfaction that is required. Otherwise, every addition will result in penalty unless immunity is granted under 270 AA. Every addition, whatever it be, even an estimated addition may also result in a 270A penalty being imposed, unless of course it is immunity is granted under 270 AA. Now in respect of 148, if somebody files a return and the returned income is accepted, that can be accepted with or without a scrutiny. Now assuming there is no scrutiny, how is the penalty to be initiated? Because for initiation of penalty, it should happen in the course of proceedings. Because 270A says there must be a direction in the course of proceedings. If there is no proceeding that is initiated, then possibly 270A may become difficult. Penalty may be difficult. And two is, even if there is an order, that order, in my understanding, should state whether there is an underreporting or a misreporting of income. If there is only an underreporting of income, then you are entitled to the immunity under 270 AA. If there is a misreporting of income, then you are not entitled to the immunity under 270 AA. So the officer, in my understanding, has to pass an order, and in that order itself has to state whether it is an underreporting or misreporting. And having made up his mind, in my understanding, that it is a misreporting, he cannot tomorrow say it is an underreporting or vice versa in the final order. Possibly he can go from misreporting to underreporting, but definitely not from underreporting to misreporting. Again, I clarify that misreporting is only a part of underreporting. There need not be a separate class called misreporting at all. All misreportings are underreportings also. So there seems to be some effort to set right the anomalies that are created by 270A, but then the anomalies created by 270A are extremely large. Extremely large. In fact, I was wondering only yesterday, see, as I said, there should be a variation between the income originally determined under 143(1)A and the income determined under 143(3). Very clearly it's provided for. Or the income earlier assessed, the immediately preceded previous assessed income vis-a-vis the current assessed income. That is, if my assessment has already been completed under 143(3) at a particular number, and tomorrow it is completed under 147 under a different number, then the difference between these two will be the figure on which, and the tax on these two, the difference between these two numbers will be the figure on which penalty will become exigible. Now the law in 270A says that the AO, the CIT, the principal CIT or the CIT appeal may levy the penalty. The AO, the CIT appeal, the principal CIT or the CIT may levy the penalty. Now, the penalty is leviable on the difference between assessed and 143(1)A income. The PCIT, the CIT or the CIT appeal will never assess the income under 143(3). They may enhance, they may make an order of enhancement when they are passing an appellate order. While they are passing an appellate order under 250 or while they are passing an order under 263. But that is not the income determined under 143(3). Then how will they levy the penalty? On what figure will they levy the penalty? Because the figure on which penalty has to be levied is very clear. There has to be a difference between the assessed income under 143(3) and the income that is determined under 143(1). So there are very many issues that rise, but at least there has been a semblance of an attempt to clarify that there will be some amount of clarity on reopened assessments. Of course, they are also making it clear that if these are all amendments made retrospectively, logically, effective 17/18. There is also an amendment to say that if there is a tax payable, then the amount on which penalty will be, because the penalty is computed on the basis of the income first. You have to first determine the income and then the tax. So they make it clear that if you are an individual HUF, etc., who is entitled to a basic exemption, then that basic exemption portion will be removed. That will not be deemed to be underreported or misreported. Otherwise, what can happen is some mischievous officer can tomorrow say that you did not file a return, I reopened your assessment, I concluded the assessment at 2,25,000 rupees. Now pay the penalty on 2,25,000, no tax. Therefore, probably they are making it clear. There is an amendment with reference to prosecution as well. This is a very welcome change again. In fact, this is something which we have been representing to the tax authorities for a long time, where there is no return filed. The penalty is not exigible if the tax does not exceed 3,000 rupees is what is provided for. Now they are seeking to amend that to 10,000 rupees, that is one part. But the larger part which is more important and more useful is that they say in computing 10,000, the law presently permits you to reduce advance tax and TDS. Two things were significantly absent. One, TCS, and two is self-assessment tax. So they are now making it clear that TCS and self-assessment tax can also be reduced, provided the self-assessment tax is paid before the end of the 11th assessment year. Provided the self-assessment tax is paid before the end of the 11th assessment year. But the unfortunate part of this is to provide that this amendment will be prospective. I thought this should have been retrospective. TCS, no, it's already paid, collected and paid into government account. Why should that not be reduced? If TDS should be, TCS should be. They made a mistake and now they are correcting it prospectively, which means somebody can argue that for earlier years that should not be the correct position. There are a couple of small amendments in the Black Money Act. The provisions of section 2 only talk about resident being, the Black Money Act being applicable. Now they are seeking to make it applicable to residents, RBNORs and also non-residents. And section 10 is amended to provide that it will include assessed and reassessed income, not merely an assessment to be made. Because section 10 presently says that an assessment will be made. So which means there was always a doubt, what if one assessment has been completed, can it be done again? So they are adding the words reassessment. Likewise, section 17 is being amended to give the power to the commission repeal, not only to confirm or to cancel the penalty, but also to reduce or enhance the penalty. So these are amendments made to the Black Money Act as well. Well, these were largely some of the changes that have been proposed. Well, as I said, not too many changes that have come through in this finance bill. Probably they are waiting for the direct tax code to come through, and maybe we will have much more professional opportunities coming through. But then these were the largest changes that I could lay my hands on in the limited time span. I must thank the organizers for one reason, as I would always say, the reason why I read was them. If they had not called me, I would not have read at this speed at all. Because there would not have been a hurry, I would have done some other work. And two is all of you for a very patient hearing. Thank you very much.
Thank you very much, Bhanu Shekhar sir. As a token of our love and affection, we'd like to present Bhanu Shekhar sir with a memento. I request past chairman of the SIRC, Shri C.A. Falgun Kumar, who is present here today, to please present the memento to our speaker. Our next session will be on the changes, amendments to indirect taxation. We have the very renowned, beloved Advocate Vaidishwaran sir, who we call Vaidi commonly. He has been my guru in a lot of indirect tax matters. I always look up to him and I love listening to him. The most enjoyable speaker, and he has a very nice way of dissecting the act and providing it in a very digestible manner. So I request Regional Council Member C.A. Revathi Raghunathan to please read out his formal prophet.
Good evening. Mr. K. Vaidiswaran, who's very well known to us, needs no introduction, but I will still do the formal introduction. He is obtained his law degree from the Madras Law College and enrolled as an advocate in 1990. He's also a grad CA and an ACS, and he joined the offices of Subraya Iyer Padmanabhan and Ramamani in the year 1990 and set up his own practice in 2000. He has over 28 years of experience in advisory capacity as well as through appearance before appellate authorities, tribunals and courts in matters arising under the income tax law, excise and customs, service tax, VAT, CST, FEMA and company law. He is a specialist in tax matters with depth of knowledge in the subject and impact of tax on various business models, and he has addressed a number of seminars and conferences on taxation and GST across the country and abroad, and he is a very sought after legal professional in GST matters. But of course he also addresses on company law, international tax, technology law and artificial intelligence. He advises clients across the country on various verticals such as the manufacturing sector, retail sector, healthcare, hospitality, media, entertainment, information technology, education, logistics, infrastructure and many other areas. He also advises associations and chambers of commerce, and he's also an author, having authored a comprehensive book on VAT in India when VAT was first introduced in 2005, and also books on CENVAT credit and for students appearing in the CA final exams. He is the chairman of the expert committee on GST, Madras Chamber of Commerce and Industry, and also a member of the General Committee of Madras Chamber and a member of the IT and ITES Committee of the Madras Chamber. And he is also in the CII Southern Region as a member of Taxation Committee and also FICCI. And he is a recipient of the Vocational Excellence Award from Rotary Club of Madras South. And he is actively involved in various social causes and also forays into humor writing, something which we did not know. Welcome, sir. We are waiting for that.
Thank you, ma'am, for those nice words. Mr. George, Mr. Abhishek, Mr. Narayan, my good friends here. I'm surprised by the fallen number from CA standards. Normally, when you have a budget meeting, you have to hunt for chairs and then hunt for standing space, forget chairs. So today I'm seeing a significant fall. You cannot attribute to tax audit pressures, you cannot attribute to GST audit pressures, GST 9C pressures. Probably people are just tired after listening to the budget. 2 மணி நேரம் கேட்டாச்சு. So after 2 hours of listening, again listening to some more people on the same stuff, maybe people we call it a day. That's a possibility. You cannot deny it because all of us watched the budget, most of us watched the budget. 1.5 hours was spent on so many other things, completely alien to budget proposals, completely alien. But the last half an hour was brilliant. Very quickly, fantastic points were made in the last half an hour. Even though we normally say budget is just not tax proposals, we also look at allocation numbers. Even allocation numbers were missing this time. If you look at, normally they'll say education has jumped from so and so crores to so and so crores, healthcare has jumped from so and so crores to so and so crores. Somebody will oppose or somebody will clap. So that drama was completely missing. But in the reality, they talked about what all has happened. In a way, it was also some kind of a powerful statement to say what all has happened in this country. So to some extent, 1.5 hours was spent on what happened, and then the next half an hour was spent on what are the tax proposals. So I have a feeling that you will get a Taxation Laws Amendment Act in the middle of the year. Because probably they didn't bring too many things now, given the fact that they had the time frame of immediately coming to power and bringing a budget. So I have a strong feeling that somewhere September, October, you will have a Taxation Laws Amendment Act which will come in, which will probably bring in a new chapter for a new levy, what we talked about as inheritance tax. Because the government was very active on that. They formed a committee, they've taken all kinds of inputs on inheritance tax. So it was very much there in the cards. So it's probably going to happen. Now, even though my subject is indirect taxes, listening to Banu, you have to react to some of the points made. One is in the context of this 194 IATDS. where they now say that the consideration for the immovable property shall include your club charges, your maintenance, your car parking charges, your power charges, your water charges, your advance fee, or any other similar charges incidental to the transfer of immovable property. That is the explanation used in 184 IA. Now, we always have this disconnect between South and North. In South, at least in Tamil Nadu, we still have two documents for flats. Legally, there is a sale deed for undivided share of land and there is a construction agreement. And in most cases, the sale deed for undivided transfer of land is the criteria for transfer of immovable property, whether for the 50 lakh threshold or for the quantum of TDS. I am not talking about resale flat. Resale flat is an immovable property. But under construction nearby, the construction agreement is never taken into account for 194 IA purposes. Now all these charges which they are talking about, club charges, power charges, water charges, maintenance charges, do not form part of the sale deed for the undivided share of land. They form part of the construction agreement. So if they form part of the construction agreement, they are not even relevant to the transfer of immovable property because it is under construction. So if 194 IA deals with sale of immovable property, it can only fasten itself to something akin to sale of immovable property, not an under construction transaction where these are all part of construction agreement. So you will have a nightmare in terms of interpreting in this because the buyer will think I will deduct on everything. The developer will say don't deduct on construction, don't deduct on these charges, deduct only on the land. Up north, you have a single transaction. You have one document which conveys everything, the construction. In fact, major element is construction. See, in Tamil Nadu, nobody deducts 194 IA on construction consideration. So construction consideration, major chunk is kept out. So if you're talking about a 1.5 crore consideration for a flat, if it is 49 lakhs UDS, no TDS. That's how it's been operating. Now, you add all these frills, then you get to all kinds of debate as to what is transferable property. So my view is that this will have all kinds of disputes from day one in terms of applicability because you have two different positions being taken by the person who purchases and the person who sells as far as 194 IA is concerned. The second point as far as the amendments made in the Income Tax Act in the context of Aadhaar card, you find a pathway whereby the FM speech indicated that they are interchangeable. Interchangeable normally would be that I have PAN, I don't have PAN, I will give you Aadhaar. If I have Aadhaar, that's how interchangeable is. But you read it carefully, it is not so. It looks as if by September 1st you must link your PAN and your Aadhaar card, failing which you have all other consequences. So if you link the PAN or Aadhaar card, then it is a choice. It is like, I'm having debit card of Allahabad Bank, I'm having credit card of HDFC Bank, so it doesn't make a difference. So typically the purpose is somewhere lost in the whole exercise. But I have a strong feeling that this is much more than what we see. Supreme Court made a lot of observations on what Aadhaar can be used for and what it cannot be used for. They also laid down guidelines in terms of Aadhaar. Now if you look at the entire gamut of Income Tax Amendment, Customs Act Amendment, GST Amendment, the emphasis is on authentication through Aadhaar. So even the GST law has been amended through this budget to say that even if you are registered, there can be an authentication process whereby if you are a registered person being a company, etc., managing directors Aadhaar, if you are an association, management committee members Aadhaar, central council members of ICAI may have to give Aadhaar because ICAI is a society, or even if it is, if your associations which are formed, all other associations, all of us are members, residential welfare association, if they are registered as GST, then Aadhaar card will be required for such as members. So I see the Aadhaar being the elephant in the land in the future to come. Okay, it is not as if the elephant is kept separately and rice is given separately. Aadhaar has penetrated completely, and I would call the elephant as the Aadhaar as far as this transaction is concerned. Now coming to customs. Some finance ministers are extremely smart. There are some finance ministers who spend a lot of time explaining how umbrella has gone up from 5% to 10%. And slippers with plastic cover, how it has come down from 10% to 2.5%. And all our national headlines will carry that for some time. There are some finance ministers who said that, yes, there are some changes we are making, you can read it yourself. She has stuck a path in between. So she has picked up some of the items and read it out, saying that these customs duty has gone up and some changes have come down, etc. But let me tell you, massive customs duty changes have happened in this budget after a very, very long time. While we can say, okay, cashew kernel is a different policy, you have various, there are other issues, trade issues and things like that. Many construction materials, for example, marble slabs has gone up to 40%. Items such as PVC has gone up from 7.5 to 10%. Plastic floor coverings and tiles which you use have gone up by 10%, by 5%. You take the printing sector, newsprint duty has gone up from 0 to 10%. Uncoated paper for printing newspaper gone up by 10%. All these magazines use a light coat paper, gone up to 10%. You import books into the country, gone up by 5%. First time books are getting taxed under the customs law. Then they go to a sector which is suffering. Today if you look at anybody, any car dealer, he is the most depressed person in the world today. He's got so much of inventory, he's not able to sell. And this kind of inventory he has when government keeps on announcing that next electric vehicle is coming, everything is going to be electric. Now when government is coming with full force and saying you buy electric vehicle, we'll give you 1.5 crore, 5 lakhs further interest, benefit deduction, etc. And electric vehicles are encouraged in a very big time. Whoever wants to buy a car also will wait. Now this fellow is so depressed that he is not able to sell. We were all hoping that there will be some fillip for motor vehicle industry. On the contrary, massive changes in customs which will actually increase the impact. Right from the horn in the car, to the rear view mirror, to the wiper on the windshield, on the chases to manufacture the car, on various parts relevant to an ICE, everything custom duty has gone up. Of course, you'll always have the argument saying that no, this is because of Make in India, we want to encourage Make in India. You still import these components. Some of these are very critically important for the purpose of China. China gives a lot of price advantage as far as these items are concerned. So massive changes there. Not only that, you have this concept called as completed car unit, CBU, completed business unit. That duty has gone up from 25% to 30%. So entire motor vehicle increase, automobile segment. Construction related materials, except cement, all other items gone up. Printing industry related materials gone up. Then digital, we talk about digital India, therefore CCTV is very important, web camera is very important, IP camera is important, increase all duties on that. So massive increase in all these items which we are not actually manufacturing. Many of these items are still being imported big time. So this is going to be generation of revenue. So somewhere the money is coming from, probably we looked at customs. And of course our favorite, petrol is always there. So petrol, diesel, we have the power to levy excise duty, we also have the power to levy additional excise duty, we also have the power to levy road and infrastructure surcharge, so all of them are being captured together. So effectively there will be a 2 rupee jump from the duty element at least. Duty element has gone up from 17 rupees 98 paisa to 19 rupees 98 paisa for petrol. Of course all channels have understood very differently, each channel is quoting different prices based on what their loyalty is like, where their loyalty is like. Now, coming to GST. Everybody said that budget is over, from now on no more analysis of indirect taxes because entire GST has been taken to the GST Council. Only GST Council will decide, you will not see anything in the budget. In fact, many organizations have also stopped holding seminars on indirect taxes because no point, only talk about customs. Seminar speakers like us, we always knew that whatever happens, something will be there. So this time what they've done something very smart. Whatever was required to amend in GST Act, instead of waiting for a separate GST Amendment Act 2019, they've gone through the Finance Bill and amended the GST Act. Probably, obviously, they'll talk to the GST Council because all the amendments are going to help both center and state. So I don't think state is going to object. One significant amendment. All of you are all WhatsApp experts and GST experts, and therefore every day you get this advance ruling. One member will charge, one friend from CA would share a WhatsApp ruling, advance ruling saying, Honorable Advance Ruling has ruled like this. Honorable Judge of ARs has ruled like this. What is an AR? Authority for Advance Ruling, but I and a couple of my friends call it as Authority for Adverse Rulings, including Mr. Datta. So we call it for the simple reason that 95% of the rulings are against the SSC. You go and ask whether it is taxable, answer is yes. You ask whether it is 18 or 28, answer is yes. If you ask whether exemption is available, answer is no. Can I avail input tax credit? No. Or a very complicated question, no, we can't answer. You can't blame them because you need a judicial flavor to an authority to have a binding effect. You create an AR, you must have it presided over by a retired Supreme Court judge, a retired High Court judge, and have calibered members. You can't have sitting officers from the State Department and Central Department to sit and decide. They are officers from the department. They are not even appellate authorities, mind you. Even a commissioner of appeals will wear an appellate authority's hat. But an assessing officer, we are living different times now. There used to be days where even assessing officers used to give relief in tax matters, but those days are gone now. Therefore, when you have a tax administrator and the tax collector to sit in judgment on this, you will have these kind of orders. Then what happens? You are bound by it, therefore you go on appeal. There is an appellate advance ruling authority. Then they found that appellate advance ruling authority, Karnataka is saying one thing, appellate authority, Andhra is saying one thing. So now chaos. Imagine if it's the same applicant, because you have different registrations, the same, you can take multiple registrations. Same applicant gets a ruling in Andhra saying taxable, applicant gets in Tamil Nadu saying it's not taxable. So somebody felt it is very, very dangerous, it's very important, we should create something, create one more above this fellow. National Appellate Authority for Advance Ruling. So if there are two appellate advance ruling authorities lying in conflict, either department or assessee can go to this national authority and this national appellate authority will decide. So now they decided that national means it must be strong. So let us create a Pakka membership. It shall be presided over by a president who is a retired Supreme Court judge or a High Court judge. And two technical members, one from the center, one from the state. Incidentally, GST appellate tribunal is also like that. If you look at the GST Act, GST appellate tribunal is presided by 3 members. One is a judicial member, one is a technical center, one is a technical state. So in fact, Revenue Bar Association and a couple of others, we have challenged this before the Madras High Court, saying that there cannot be a majority of technical members in a judicial court. Because the argument is, SESTAT has become GST tribunal. SESTAT is one judicial, one technical. ITAT, one judicial, one accountant. So everywhere it has to be equal. Then only you will have that fairness system in the system. You must have it as fairness. So we have challenges, we have to wait for the orders of the court. Matter is also pending in Delhi. So by now, after the same language used in the GST appellate tribunal is borrowed into this National Appellate Authority tribunal. Some of your claims would be in compounding scheme. So in this compounding scheme in GST, there is a turnover calculation. Up to so and so turnover, you are eligible. All kinds of doubt came whether turnover includes exempt supplies. So answer was obvious. They said yes, turnover will include everything. Then they suddenly realized that you don't do anything as a business. You simply put money in a fixed deposit. That interest comes. That interest is unfortunately an exempt supply. And therefore your interest earned in fixed deposit also you must include, then you are not eligible. So the government and lawmakers understood this problem and said, okay, don't worry, we'll change that. So section 10 has been amended specifically to exclude all this interest on deposits, discounts, etc., loan, etc., which you receive on account of value of turnover. Then whatever was the scheme which was available for service providers in compounding now forms part of the Act itself in terms of section 10(2)(a). Every registered person shall undergo authentication or furnish proof of possession of Aadhaar in such form as prescribed. So even if you are registered, you now have to go and demonstrate yourself that how you got it. Probably this is because of the fake racket. This fake invoice racket has really bothered the government so much that they want, because fake invoice racket, the underlying story is that every fake invoice generator is a valid GST number holder and a valid PAN holder. Because without PAN you can't get registration. So apparently this person has created GST number with a PAN number, and in the same location is probably created multiple numbers. It's the same, whatever has happened. So now Aadhaar is tricky. At least government believes it's tricky. The government believes that a person may have 25 PANs, he may not have more than one Aadhaar. I hope government is right. Because the way Aadhaar was issued is quite scary. All of us have all gone through the process. Some fellow sits there, you give some document, he's totally disinterested, he uploads some data, he gives you. I can simply do a survey. You're all part of Chennai. Your brother, sister, cousin lives in US, lives in Singapore, lives in UK, already become citizen of that country. Do they have Aadhaar? Yes, they have Aadhaar. But under the Aadhaar Act, they are not supposed to be issued an Aadhaar. All of them have Aadhaar. Why they got Aadhaar? Because Indian Bank said unless you have Aadhaar, all the money will go somewhere else. So they got panicky. They somehow came to one of their Chennai visits, one of their Bangalore visits, one of their Delhi visits. They ran to this corporation office. That fellow said, any of these proof you have. One proof is that he registered, got an Aadhaar. So what the Act says is completely contrary to who all has got Aadhaar. Now, if that is the case, is there a risk in Aadhaar itself when you say that Aadhaar is the best authentication? I hope it is not the risk and Aadhaar is the ultimate solution if they really want to go for authentication. But what will happen is that this can open up delays. Somebody may be traveling, somebody may not be able to authenticate in time, so your viable business can get affected with time. Coming to some of the other amendments, very interesting amendment. Government will specify a class of registered person and say that you are a supplier. From now on, you must ensure that you have a mechanism for electronic payment, mandated. You can't say, I don't have POS, I don't have a card system, I cannot accept cards. For a long time, this taxi fellow in Chennai airport will refuse to accept cards. How much ever you ask him, he'll say cash only. Now only he's put it. So many of these service providers prefer, because that leaves a trail. So the transaction leaves a trail. So now they say you have to keep it, but it is the option of the receiver to avail it or not. He may still say I would like to pay through some other modes. They are trying to push digital as much as possible. One major amendment relief is that your own money sitting in IGST cash, you can move to CGST cash or HGST cash. So the portal would be enabled to do all that. The Act is also getting enabled to do that. Section 50. Many of your clients would have faced this problem. That fellow forgot to file returns, or he tried filing returns, something got stuck, he could not move further, somewhere it got stuck and he couldn't file the return at all. Finally, he managed to file the return. When he files the return, he gets a notice saying that you have set off input tax credit, you have paid interest only on the cash portion, please pay interest on the credit portion also, ITC portion also. One person got upset, went to High Court, Telangana High Court, filed a writ petition. Telangana High Court gave an elaborate judgment saying nothing wrong, pay on the interest on the input tax credit also. Probably the point was not adequately canvassed. What should have been argued was, the ASSI should have argued saying that, see, please understand GST. If Falgunji has supplied goods to me and Falgunji has filed his GST return and paid the tax, government has collected that tax. My claiming it as input tax credit and setting it off is next stage. But they have already collected the tax from Mr. Falgun. Now when you ask interest on that input tax credit also, on the ground that you have suffered and there is compensation, you have not really suffered. You have suffered only on the cash portion. Yes, there is a delay in payment of cash, I should pay interest. That is logic. But unfortunately that logic never came through, and therefore the judgment had a paragraph saying that till the input tax credit is knocked off and the return is filed, it is lying in the cloud, and government does not have control over that money till this is filed. Government already has control over money because he has filed his return. So unfortunately it was not adequately argued, and therefore the judgment went against. Luckily the government listened, council listened, and the parliament has now amended the law. Section 50 has been amended saying proviso. Interest will be only on the cash portion, not on the input tax credit portion. Obviously this will come into force from a date to be notified. Therefore you will have litigation for the past period. Future at least is reasonably assured and secure. Another friendly amendment. You are an exporter. You ask for refund. What happens is that in most cases you get your CGST portion, and then you are driven to another office to collect the SGST portion. That happens, does not happen. In many cases it also happens after some point or sometimes early also. Now they are amending 54 to say government may disperse refund of state tax in the manner as prescribed. Government is settled on. So within them they may adjust and give the money in advance or something. Good for the exporter. Anti-profiteering, the provision itself should have gone. They got 2 years extension because nobody knows how to calculate that commensurate loss and benefit. Now they are further saying if you are accused and found to be anti-profiteering, penalty also 10% of the profited amount can be imposed. Special amendment has come. Minor amendments in Customs Act. Today the biggest challenge is smuggling. Not only smuggling in the most complicated way where it is impossible to find out. He keeps the items wherever possible in his body. And each time you read the newspaper, it was found somewhere, etc. There used to be a provision, earlier law. If the assessing officer, if the proper officer suspects that this person is having something secreted in his body, he has to take him to a nearest magistrate. Then the magistrate will then also look at him and have a suspicion. Then they'll refer him to a hospital to extract valuable minerals. Now they feel that this is taking a longer time. So now the amendments have come saying that proper officer himself will have necessary equipment to scan you. At the customs station itself, they're going to install equipments. Only thing is, beautiful language, I'm very amazed by that language, where the proper officer has reason to believe that any person has any goods liable to confiscation secreted inside his body, he may detain such person and shall with the approval of DC or AC scan such person using such equipment as available in the customs station without prejudice to the rights available to such person under any other law, including his consent for screening or scanning, and forward report to magistrate. You want to scan, okay, okay. So then you can be scanned and then the report goes to the magistrate, then automatically all other consequences follow. They are expediting the extraction of valuable minerals from the body than the process. That's all. So that's an amendment as far as 103 is concerned. Most dangerous amendment is 104, partly. I won't say fully dangerous. Government is a victim. Government is a victim of drawback frauds. Government is a victim of script frauds. Lot of one paper will 10 fellows will claim the benefit. Everything will be original. All kinds of nonsense will happen. With, of course, it happens with the connivance of some of the officers. Otherwise, it's not possible. It is not as if government is not aware. So they are now taking all kinds of action to curb it. Now they are putting a section saying that if you are fraudulently availing or attempt to claim drawback or any exemption from duty. See, drawback is something different, scrip is something different, exemption is completely different. I may claim exemption because you have given me 1,000 exemptions in customs notification. For example, I may claim an exemption, it may say World Cup is exempted if brought into India. Now suppose you bring a trophy, whether a trophy is cup, it will go to Supreme Court. Right? Now that is an interpretation of whether I am eligible for the exemption or not. So what is the intent of the exemption? What is the language used in the exemption? What is the interpretation? Exemption can be subject to all kinds of interpretation. Hospital will be there, healthcare unit will not be there. Diagnostic center will be there, laboratory will not be there. So are you a center or a laboratory? All kinds of disputes can happen. So these are all exemptions. Therefore, to piggyback exemption along with drawback frauds is something serious. Drawback I understand, scrip I understand, but exemption I am not able to accept. Because anybody can claim exemption. Now what they are saying, if the amount involves more than 50 lakhs, non-bailable. Utterly arrest, non-bailable. So they want to borrow the GST provisions and try to make it even more stringent as far as customs is. Customs was already stringent. Sometimes what happens, you commit an offence under the customs law. The government feels under the customs law, they can confiscate the goods. So section said you can confiscate. Peculiarly, there are some items which cannot be confiscated by sheer size. I still remember the controversy with metro train. Imported carriage, how can you confiscate? அப்படி கான்ஃபிகரேட் எங்க வச்சுக்கிறது கஸ்டம்ஸ்ல கொன்ற முடியாது போதுங்க. So now they have amended the law saying that yes, we will confiscate by passing an order saying it will remain there, you don't use it, you don't sell it, you don't use it for your business. The enabling amendments have happened as far as customs is concerned. Another power which they borrowed from income tax, if the government is of the opinion or the commission is of the opinion that there is something going on or duty is due, bank can be provisionally attached. So even before a show cause notice stage, you may have a bank attachment also possibility into the customs law. So these are some of the amendments. One major chapter in the Finance Act, chapter 5, we now have what is called as Sabka Vishwas, Legacy Dispute Resolution Scheme. Excise law, service tax law. All your disputes. Show cause notice issued, order yet to be passed. OAO passed, matter pending. Appeal filed, matter pending. Appeal pending in Sestat, High Court, Supreme Court, matter pending. At that stage, you can decide, sir, this is going to take years. I would rather see if I can close it because now GST has come. GST disputes are bigger files. Yadamail office level chicken. So should I keep the service tax files or excise files? Should I keep only GST files? GST every day one dispute is coming. Therefore, the client also feels that he wants to close all matters, and multinational companies will say immediately close it. So, special legal dispute resolution scheme. It is a good scheme. I I would say it's a bad scheme, because normally in all these schemes they will say if 100 rupees tax is due, if you pay 99 rupees, we'll give 1 rupee exemption. If you pay 75 rupees, we'll give 1 rupee exemption. But you have to pay the penalty fully, something like that they'll put in such a manner that nobody will come. So the scheme will be very, very so to say, that you won't be enamored by the scheme. But I think this scheme may not be that bad, because it says if 50 lakhs or more, or 50 lakhs or less is the due, 70% you pay and close it. If 50 lakhs or more is due, 50% you pay and close it. So if you have a 5 crore demand, 2.5 crores you pay and get off. And excise service demands are always in crores, huge demands. So if there is a pendant and you let us say if I have a counsel and I am looking at a client who's got a dispute pending in Sestat and the matter is already decided to the Supreme Court against him, he is just luck is that matter is yet to come because of pendency. If it comes, he is finished. So that's an ideal case to walk into the scheme. Pay off your 50% and cut your losses and move forward. So it's a very good scheme in that sense. It goes even beyond that. It says even if audit, investigation, etc. has happened and the audit fellow has quantified, yet to go for show cause notice, that time also you can close and come. So they're trying to clean up the entire pre-GST regime litigation. Probably this part of the national, you had the economic survey which talked about litigation reforms. One of the litigation reforms was to reduce pendency. The best way to reduce pendency is to go for these kind of legacy dispute settlement schemes. There are other amendments which are very technical, so I'm not taking you through that. But this scheme, I think, would play a big role as far as going forward is concerned. Thank you very much for a very patient time.
Thank you so much, Vaidishwaran sir. Luckily, when I was going to introduce you, I was planning to say nowadays there are not many changes in the budget regarding indirect taxes because GST has come. Luckily, I forgot that and you managed to cover so much. And it was really eye-opening because I straight away assumed not many changes are there. It appears that a lot of aspects have come out in the memo of the budget which has now been released. As a token of our love and affection, we'd like to present Vaidishwaran sir with a small memento. I request C.A. Kumar sir to please come onto the dais. The next session will be on the macroeconomic aspects of the budget. As already touched upon by the other speakers, the Honorable Finance Minister today spent more than an hour and a half on the economical aspects of the budget. And given the current economic trends, it's very important that we pass the budget, and for that we have our expert, C.A. A.K. Narayan sir, who is a regular face at our institute, especially in our investor awareness programs. His expertise is something special. I will just briefly introduce our speaker. He is an associate member of the ICAI and Bachelor of Arts from University of Madras. He has over 2 decades of industrial experience in corporate, finance and top management. His last position held was the CEO of a very, very large leather group in Chennai. He is a past president of the Tamil Nadu Investor Association for over 15 years. Past president of the IFA Galaxy Group of Financial Advisors for more than 3 years. And he was the publisher and editor of the Tamil Nadu Investor Association's Digest for more than 15 years again. He has over 3 decades experience in the capital markets and he is the author of a very, very famous and used book, How to Invest Right and Prosper. His present position is as an investment coach and a trainer, a financial planner for individual trusts, HNIs and various corporates. He is a trainer on investor education. As I already said, he is a go-to speaker for all the institutes on any matter regarding investor awareness, because the way he explains the markets, the interaction of the economy and what is coming. In fact, I may go as far as calling him a Nostradamus of the stock market, because the way he predicts it is something very special and usually always right. He is invited speaker for literacy programs for financial and capital market seminars in schools, colleges, CA Institute and other forums. He is addressed on the subject of latest developments in capital market and on financial literacy program as well. He's a member of the LIC Zonal Advisory Board South, and he has served as a trustee and investor protection funds, served as a member, committee member, and chairman as well. Served as a member on the SEBI Investor Protection Fund as well over a decade. He served on the Investor Protection Fund of the NSE Mumbai. And the list goes on. He is really someone who's accomplished a lot, but very, very grounded. Thank you so much, sir, for taking time out of your busy schedule to address our members today. With this brief introduction, I request A.K. Narayan, sir, to please take charge of the podium. Please give him a very, very warm round of applause.
Good evening. Thank you, Abhishek, for your good words. I think you have heard enough about direct taxes and indirect taxes, and I think they have nicely covered the whole budget. Actually, nothing much is there as far as the direct taxes and indirect taxes, but they nicely presented and gave the insight about how the direct taxes and indirect taxes are going to get affected the individuals. Banu Shekhar also raised the issue of how the direct tax collection has gone up or almost doubled from 5 lakh crore to 11 lakh crore in the last 6 years or 7 years. There are various issues, and government is also wanting to increase the receipts far more than what it is today. I think they have seen the potential of the people and potential of the earning capability of the individuals, and the way in which the consumption is going up in India. They must have thought that it's a nice way of collecting the money from the individuals who have got the ability to pay. The general question which is coming up in the minds of the investors on economic front is whether the 5 trillion economy is going to come in the 4 years or 5 years, which has been stated. Ever since the economic survey said yesterday about the 5 trillion, immediately everybody started raising the issue whether we are going to achieve this 5 trillion in the next 4 years, 5 years and all that. A lot of discussion took place with the TV. You must have seen it yesterday and also in the morning. A lot of people predicted that with this 7% of GDP growth, it is impossible to reach 5 trillion economy in the 4 years and 5 years. And somebody was saying the real terms of GDP has to be 12% to achieve this 5 trillion. A lot of discussions took place. The finance minister in her budget speech, she made it very clear that we took about almost 50 years to achieve 1 trillion in our economy, and now as of today as we stand, she said we have crossed 2.75 lakh crore in 7.75 lakh trillion as of today, and she is very hopeful that we will touch 3 trillion by March 2020. Maybe it's setting at rest whether we will go closer to 5 trillion or not. The issue is not that. In my opinion, instead of debating whether it is possible, whether it is reachable and all that, for a common person, yes, it is a great achievement if you achieve it, but in case we go even closer to that, I think we should feel proud about that. Instead of showing a lot of pessimism in our own way of saying that we will not be able to reach or we will not be able to compete with any others. As things stand today, we are competing with China in a big way. She was also saying we are the 5th largest economy, almost 6th across, and we are the 5th largest economy in the world. Now when that is the case, why not we go for 5 trillion very soon? We will be very close, we will be next to China and USA going forward in 2025 or 2028 as per the World Bank their prediction. It looks to us that we are going the right path. Lot of things which have happened in the last 5 years, 10 years and 15 years, we are now rectifying slowly but steadily. Now, whether it is all, we are going the right path is what is important for us. It will take time. Now, economy is slowing down a little bit. Now, everybody was saying the earnings are not as per the expectation. Yes, the earnings have slowed down. Then now June is over. Now, everybody again says the earnings are not going to be as per our expectation. Yes, it will not be so good the first quarter. It's known to us. It is very clear to us. Now the only question we need to ask is the slowdown for real? Is it going to be temporary or is it going to be permanent? That's the only question we have. That's the question we need to answer. We need not rush into anything. We need to have slow and steady pace to reach the economic heights and to reach the growth path. Therefore, that to achieve, we need to take some steps. We are seeing what are the steps the government is taking in the last 3 years, 4 years and all that. The reform of GST is tremendous. we had some teething problem, but we overcome that slowly but steadily. Again, they talked about the linking of Aadhaar card and PAN card. All these things are definitely on the right path, but it will take time. Every time people are put into a little bit of inconvenience, but you have no choice because we are all used to certain way of living all along, but it has to go a little bit change now. That is why we are finding it a little difficult. But things are becoming a little more better and people are ready to fall in line. If it has to be, we have to do it. We have to do it means people are ready to fall in line. So that is what is happening today. Now GST collection, yes, it has come down, but it is not going to be lower all the time. It has to show some improvement going forward. So we are aware that direct taxes and indirect taxes will be at par and as per the expectation. What can the government do now? They have not touched the exemption for direct taxes. They have not increased the taxation for the middle class. They have touched, yes, the super HNIs and other categories where their earnings are over 3 crores and 5 crores. Now from where they will meet the deficit, because they have to spend. They are talking $100 billion is going to be spent on the infrastructure in the next 5 years. This is the real theme for the India now. The next 5 years, we want to spend $100 billion on the infrastructure in the 5 years. We are seeing what kind of improvement we are doing. In the metro, airport modernization, in the port, the roadways, railways, everywhere. So the new India, definitely whatever they are visualizing, it will automatically happen. But then we have to give time. We are seeing Chennai now, we underwent some kind of a difficulty when the metro was under construction, but then we are feeling happy that it is now running, and we are very, very happy that we are able to go quickly to the airport in 15 minutes, 20 minutes from Mount Road. Why? Because of the connectivity. So all these things will bound to happen, and we are late. Definitely we are late by 10 years or 20 years. 100 years ago it was built in Japan, or 50 years ago it was built in Europe. But then we are late. What to do about that? But then at least we are now falling in line instead of saying we will not do it. So the infrastructure is the major theme for which they want to raise money. Now, again she was saying about disinvestment. Now everybody was saying this investment is not going to happen at all. Every year they are saying 80,000 crore, 70,000 crore, but then they don't achieve it. Now this time she has gone 1,05,000. She has crossed 1 lakh crore itself. Now, is it possible? Yes, it is possible. The government has identified some other companies, whether in ETF route or any other route, they want to privatize. Now she said 51% will hold it, but definitely the path is for privatization because the government needs money. Now it is nothing wrong in that, because we are finding that some of the companies have done extremely well. Now I don't know, many of you may be knowing, the Hindustan Zinc was privatized about 15 years ago. Now the government is holding about 20% or 24% stake right now. The amount of dividend they are getting out of this 24% is at least 5 to 6 times higher than what they were getting when they were holding 100%. So this is how the results will be in case they are able to disinvest in some of the companies, and the companies are managed well by good corporates. This is what is happening now. So there is no point in saying that the privatization is not going to be the thing. It is going to. We are going in that direction. Now we are also seeing a lot of banks getting merged. We have seen that, and some more will happen now. She was saying that banks will definitely get merged, some more, but she didn't specify anything in detail. But definitely we are. Every year you will see 2-3 banks getting merged, and definitely it will be the order of the day going forward. So all these things will happen, and people are watching what is happening. The reform process, what is set by the government, will happen in the next 3 years, 4 years, because the foreigners are also watching us very, very closely today. If the foreigners want to invest money either through FI or through FDI, they are watching the reform process. The labor process is a very important process which needs to be addressed. Now the finance minister, in her own way, she said, I'm going to convert these labor laws into 4 codes. So she said that I'm going to simplify a lot of things for the business people to make sure that labor laws are simplified. We don't know the full details about that, but she said she spent some time on explaining that labor laws are a little complex today in India. Yes, but it has to be simplified. So she said we are bringing out 4 different codes of labor laws so that it becomes simplified, so business people also get some advantage in understanding and running the company. After all, the government wants to support the SMEs, they want to support the companies, the small way or big way, but they want to support them in the best possible way so that the people get employment. one of the caution people are talking about is because the growth is not there, we are having a lot of unemployment and employment generation is not happening. But you must also understand that digitalization is also causing one of the problem for whole generation of your employment. So both are going hand in hand. Because if you are going to digitalization more and more, and if the banking transactions are going to be all through RTGS and bank transfers, automatically the number of employees are going to come down here and there. And you will not find this kind of number of employees sitting in the bank branches like what we saw 10 years ago or 15 years ago. 2-3 people will be able to man a branch, or maybe there won't be any branch because there won't be necessity for you to go to a bank. Many of the IT employees who come to me, they'll say, when we say for investments you need to give a check, they'll say I don't have a checkbook at all. They don't have a checkbook. They'll only do online transfers. They don't believe in having checkbook and all that. So system of checkbook itself is going away from the system itself. So where is the necessity to go back to the banking and all that? So all these things are very important for us to understand that this digitalization is going to be the mainstay going forward. How does this help? The foreigners who want to invest money in a big way. That's why another area she said is the tourism. Now tourism, she says, we want to develop in a big way in India because she has realized that many countries, small countries, you take the case of small countries like Singapore, Malaysia, Bangkok, or any Southeast Asian countries like Indonesia, they are able to attract lot more tourists than what India is doing. For a simple reason that they are able to provide the proper tourism facility what we need. So same thing is going to happen in India. That's what she's aiming at. It is not impossible, but then we need to fall in line and to push for the tourism. The revenue generation in India in tourism can be very high. Now another area what she touched as an economic reform is going to be the river waterways. Lot of things can be done on the waterways. The waterways is another area where we can transport people, transport goods, transport many things actually in that. So they are now working on that also because there is a limitation on train, there is a limitation on the road, and there is a limitation for air. But you will see lot more things happening. But then the problem in India is we are going very slow. Yesterday one gentleman came from London and he was talking to me about a big hotel chain. He's the head of a hotel chain in London. He was saying the hotel we started in India and China on the same period, 10 years ago. He said, I'm having 40 hotels in India as compared to 400 hotels in China. Same time we started, both in China and India. What is the difference when I asked him? He said, very difficult to get the licenses, very difficult to employ people, very difficult to go through this. He's ready, he's saying I can open 400 hotels, there is no problem. But the pace with which we want the hotels to be constructed, the hotels to be licensed, how to employ people are very tough in India. That is why China, he said, is far more easier for me. But then they are also looking at India. It's not that he's going to stop it. The very fact he has come all the way means that he's looking at India and seeing it every time whether there is any improvement, there is any possibility of increasing from 40 to 100 at least. So this thinking is going on. So a lot of mindset has to change and government has to make a push and government has to help. Then only this will happen. Otherwise this will not happen at all. So this is a typical example how tourism can help and how the hotel industry can thrive. You are seeing the airline industry, how people are employed there and how the airline industry was running, and suddenly you find that Jet Airways was closed. It is a very sad situation for the employees altogether. Do you mean to say that India aviation sector will close altogether? It will not close, but the new airlines will come and new employees will come there. Automatically the consumption will go up in that area. People are ready to go. When you are going to Bombay now, you are not checking the train fare or train arrival time or departure. Everybody is looking at the yatra.com to check what are the flights available. The amount availability with the people are so huge, they are able to plan their things far in advance, and so they are able to spend money in airline. So all these things are taken into account. India is one of the fastest aviation industry to grow in the world today. That is why we are having lot of small airports. She also mentioned today that aviation is going to be one of the area where they are talking about. The Udan scheme where they are going to touch so many small towns and cities is another area wherein they are able to improve the connectivity. So the connectivity through air and waterways and all that are going to be a big way, and railways are not going behind. They are also trying to do their best. and they want to create a facility whereby they will be able to show how things can become better for the passengers as such. So all these things are happening today in India, and lot more facilities are given. The other area what she touched was on education. She's saying we have to attract a lot of money for education. Why should the students go abroad for studies? It is not that India is lagging behind anything, but we are lagging behind because the getting into admission mode is difficult. A lot of issues are there in getting admission into good colleges and schools. So we need to improve upon that. So they are expecting some more reforms in the education sector itself. One thing which needs to be done in India is education sector. If education sector is going to be improved, automatically you will find lot more things will coming into the thing. So all these things are very, very important for us to understand. Our ability to improve all these things will automatically get reflected in the stock market. You will automatically see the stock market. Why the stock market? People are interested in, whether foreign investors or mutual fund investments. Why it is coming? You are seeing that things are happening today in India in a big way because the ability for the companies to raise money and for the companies to run is getting better and better. Yes, we had some issues of corporate governance. We are now coming out of that slowly but steadily. The promoters have understood that making money by going public and also by having a good corporate governance, things can be far more superior than having a closely held company. A lot of people have understood that. It's a very sad story that ILFS and NBFC sector got into serious issue since September 2018. The finance minister has addressed the issue as well. She said for good non-banking finance company, the banks are ready to fund it and they will give credit facility to stay liquid. It's a very important thing because today the talk of the town is NBFCs. People are worried about their deposits, they are worried about their NCDs, they are worried about, of course, the shares, they are taking their own risk. But the mutual funds have invested in many of the housing finance companies, and the banks have deposited, and many HNIs have given money, and a lot of pension money has gone into the system. But the government is aware of that. But they don't want to interfere directly, but they said it is possible that the banks can lend money to a good and nicely managed NBFC and companies. So it is going to be the order of the day. The good corporate governance company will be there permanently. If the company is not managed well, automatically you will find the company will crumble down. So you have to identify some good companies and always invest. We always say that you need to identify good company, means corporate governance will be the theme for the whole thing, and that is what is exactly happening today. If you look back the last 6-7 months, what is the problem of ILFS or any other NBFC which is having problem? Is corporate governance. If the governance is in place, you will not have these issues at all. That is why we always say you must have access to the company's balance sheet, annual report, and then study that very well. Also, the leveraging is a major issue. That also has been addressed now by giving some kind of liquidity provision. So all these things are very important, and banks also, she said, I'm giving about 70,000 crore. So 70,000 crore, she said, I'm giving it for the banks for recapitalization. It's a big one actually. It's a big relief for the banks to lend. See what is happening today, the PSU banks are not lending money. NBFCs don't have money to lend because they are in the process of collecting and repaying the old debt. So who will fund the projects? And private investors don't want to expand because the capacity utilization is only 60% or 70%. So who will grow the company? So the problem is everybody is waiting at the sideline. But these kind of things, when the government says that we want to push you to the extent possible and say that the government is in place and the banks will help you and NBFC will not be allowed to go down the drain, if they are managed well, automatically the motivation level goes up. So these things are being seen from the sidelines by FIs. You are seeing today the Government of India's sovereign bond rates have come down. She also said the foreigners will be allowed to invest in the debt route. Why she is saying? Because she feels that the debt money can also give them a decent return, which will also give liquidity to the system. So that is what is happening. You see across the globe, the interest rates are falling. Across the globe, the interest rates are falling today. So India is not going to be different. We can aim to get a higher return, But it is not possible when the whole interest rate scenario is coming down and when your G-Sec rates are coming down, RBI has to fall in line in reducing the interest rate soon. Now the question is, when the interest rates comes down and when the interest rates is passed on, the lower interest rates are passed on to the borrower, automatically you will see the cost of production coming down drastically. All these things will take time, but this is what is happening today. Nobody talks about inflation because inflation is coming down slowly but steadily. All these are related subjects. Your inflation, your interest, all these things are related. If inflation is falling, interest cannot be up or higher. So all these things are important for the government and it is a good sign for them. So all these things are happening, and when the interest rate and inflation is coming down, automatically your stock market will keep going up. That is why you are seeing the index going up steadily despite all this turbulent activity going on in the market. People used to wonder, like Bhanushekar was asking, how the direct tax collection has gone up double despite the fact that the growth is not there and who is paying the tax. Same thing will happen here also. You will also be surprised to see the market going up slowly but steadily. In 2008, when the index was 8,000, people are questioning how this index 8,000, we cannot stand 8,000, it has to go down. From 8,000, it has grown 5 times today. It is giving you 16-17% return the last 11 years or 12 years. So this is a type of return one possible for a person to get it, provided you have a right aspiration and you know how to tackle the market and how to get into the correct market. So all these things are good sign for you today to look at the things. But the one unfortunate thing in India is the saving rates are coming down. That is the issue she also raised today. But overall, if you look at it, Indians' savings are coming down. It used to be 35-36% long time ago, but then in the last 2-3 years, it's coming down to 29%, 30%. It is not a good sign for a person not to have a saving. If you walk into anybody in a youngster office and ask him, how are you spending your money and what kind of saving you have? They don't have saving. They are hard pressed for money. On 26 and 27, they run around for money. In fact, they not only spend their earnings, they also borrow money in personal loans. Personal loans are going up. The other day, somebody walked in my office and said, sir, why don't you work with me? The personal loans are growing at 25%. So you should be in this industry. Motivate people to borrow money. I said, I am only interested in saving and people investing money. No, sir, this is another area where you should take interest. I said, I am not interested in borrowing or lending. No, sir, you may not be interested, but there are people who are interested. Why don't you push them? I said, I will look into it. I am not in favor of neither borrowing nor lending. That is a different story. But then he was saying, 25% is growing every year. Personal loan at 25% rate of interest. Now, 25% rate of interest. It is impossible that you people don't know about it. I am sure the youngsters are borrowing at that rate of interest. If you walk across the road and do a survey of 100 people, you will see 25 people are into this group. So it's a very sad story of India getting into debt trap. Now, it will not be visible now. Maybe if you're going to continue like this, you will have serious issues going forward. It is important for you, I always tell the members here, that you need to educate your youngsters at home very, very much. You have to tell them that, save money, whatever may be your salary. A lot of people ask me, sir, I got only 25,000 rupees salary, what can I save? It's not a question of 25,000 or 10,000 or 1 lakh. If you have 25,000, you save 10% at least, 2,500 rupees you save. What prevents you from saving? No, sir, I got a lot of commitments, EMI. It will not work. Everybody will have EMI, but then 1 lakh person also has got EMI, 25,000 also have got EMI. Nobody is happy about the whole thing. A lot of people ask this question, That means they are living beyond their means. The other day one gentleman walked into my office and said that he wants to invest but he doesn't have liquid cash. So I asked him what is the salary. He showed me the salary structure of 2.5 lakhs. So I said 2.5 lakhs you are earning and what is your problem? How big is your family? He said my wife, she is the CEO of some company, she is having about 2.5 lakh salary and one small daughter, that is about 6 years or 5 years. So I asked him what is your problem and how you are spending money, 2.5 lakh salary. Then he was saying he is paying about 1 lakh rupees towards EMI for a house and about 70,000 rupees EMI for his car. I said, what kind of car you are having, 70,000 rupees? Then he showed me the car. He has purchased a nice Benz car. It's a beautiful Benz car. He said, I go to Tanjore to meet my mother once in a way. So I thought it's nice to go 4 hours to Tanjore and show the car and come back. So you will not have liquidity. But these are all actual thing what I'm saying. I am not creating a story for all of you here. But what I'm saying is, there's nothing wrong in that. You can buy a car. But then you should not say, I don't have money to invest money. If you are having 2 lakhs, I said, you must put 25,000 rupees, set aside at least, invest somewhere, and then try to work out your EMI for house and all that. Then he was telling me, I'm going abroad, sir, I'm getting a job in USA, now I don't know what to do with this car and house and all that. So then another issue. A lot of people borrow money, think that they're going to stay here, then they have the EMI, and then they are in trouble. So all these things, time and again people are in trouble. I always tell people, youngsters, don't be in a hurry to buy a real estate. There is nothing urgent. That's why earlier times people used to buy in 45 and 50. Today at the age of 25 they are trying to sign up EMI. Not at all required. Where is the house? Where is the real estate will run? It will not run at all. So you need not worry at all. Real estate will not go up in a hurry. People are in deep trouble with real estate. Use a buyer's market. You can buy it at the cheapest possible price if you have the adequate money. But people are buying in EMI with other man's money. Then you are in trouble all the time. Throughout your life you have to pay EMI for living in a house where you are not sure. You buy it in OMR, you get a transfer to Bangalore, you are finished. You go to Pune, you are finished. You can't be buying a house everywhere you go. So it is not possible at all. So be careful about it. It is an important for an individual in the house to educate the youngsters whether they listen to you or not. Because I always hear that they are not listening to me, sir. They will talk whatever they want. That's the whole thing. And people don't want to discuss these issues among the family members. Husband and wife will come and husband will not know what wife is doing. Wife will come, she will say something and husband will not do. They will not come together many times. So all these things are happening today in the market because money is important. People are running behind money and everybody wants to make quick money. It is not possible to make quick money also. And ultimately what people are doing, I was surprised. I was really surprised when I heard people are investing money and they're losing money. The other day I was addressing a forum in Tiruvatiyur. And like this, somebody, in the end, the question answer, I had the SEBI official, NSE and everybody. So one person asked me, got up and said, I've invested 5 lakhs, sir, but I have not got any receipt. I have not got anything out of this. It's almost 1 year now. What do I do, sir? They are saying SEBI has confiscated my account and they are not giving me any money. Now you are having SEBI, everybody is there. Tell me, sir, when will I get back the money? I said, where you have put money in the individual case, how can you answer in a public forum? Then when I went little more deep into the matter, that fellow has put some money in a scheme, not very far from here. You'll be surprised, in Nandanam. This fellow is operating in a, Temple Tree, some big building, Temple Towers, and he was running a Ponzi scheme. That fellow simply was saying, I will double your money in 135 days, put 5 lakhs here. And this chap has given 5 lakhs to him. But he has also got some broking or something which will be recognized. But the money what he has given is something totally different. So this fellow has collected the money in a different Ponzi scheme with a clear understanding it will double in 135 days. If money can be doubled in 135 days, do you think I will come here and talk? I will be only doing this work at home. So you must understand this, money will not double. If you get 10% tax-free income on a regular basis, on a consistent basis, you should thank God for that. Instead of that, if you aspire to get more and more money, the shortest possible time, and put money in unregulated schemes like this, then only you have to be blamed and nobody else can help you. Whether it is SEBI or NSE, you have time to keep going behind them, police, enforcement, everything you can go, everywhere you will be spending good money after bad thing. So never do these kind of things. I was really surprised by that man. I told him, even God cannot help you. Because that, luckily, next day I saw in the Times of India, that paper, the news item came, same news item came. I don't know, I can even show you that news item. It came in the paper saying that 10,000 people have been cheated in the heart of the city in Chennai, in Nandanam. And people are here. When I asked 2-3 other people, they said, sir, some extra money I had, I thought in case it doubles, why not? This is everything. And he's a doctor. I asked him, you're a doctor, why are you putting money? sir, I know I may not get it. I have not even told my wife. Let us leave it like this, sir, he said. Not leave it like this. Don't talk or anything further. So this is the type of people we are having. That's why I said the family members are not aware about the accounting. They don't know where people are investing, and I was really astonished. And the best part is, you people always question which is not in your hand. You are questioning whether government of India will achieve 5 trillion economy, whether GDP will grow at 7% or 8% or 10%, and you will also keep questioning whether the market will go up or down. But then finally, after knowing all this answer, you will go to this Nandanam man and put the money there. What is the point in doing this kind of work? And not only Chennai, I was really surprised. I don't know, I will show you this another slide. Another gentleman in Bangalore, he was operating a very nice way of operating Ponzi scheme. Everywhere Ponzi scheme only. This Ponzi is the greatest factor available. That fellow also like this, because people are aware, people are educated, they are seeing lot of news in the paper and net and all that, but they have money, but they don't want to put it for 7% bank and all that. They want extra money because your expenses have gone up, because you are living beyond your means, so you want to earn quickly, so you are given to this gentleman. This gentleman is a big man actually. He claims himself to be a Khan Academy or something he was running, and he said, moment you invest, he will give you a Quran. So people are very happy that he gave a Quran. So they thought he's a pious man. So people are putting money to him, and he was giving 18%, 17%, 16% and all that. Then finally one day what happened? He collected some 10,000 crores or something like that. One fine morning he sent a small video to the police station and said, I am going to commit suicide because I am not able to pay back any money, so please forgive me for all the bad things. Then he took a flight, Emirates flight, and went off to Dubai. And then people went behind people and Khan, everywhere they were running around and they could not get anything. What happened there, Khan? Now people are going around in circles to find out. Now from Dubai that man is writing saying that I gave it to some politician, so that fellow lost the election. So I don't know how to collect the money. You please try, this is the name of the person. So now how can you go and collect your money from this politician? But what I'm saying is, if you are not careful and if you are ready to, fall for these schemes, nobody can help you. And we are questioning unnecessarily the market. The market has gone up from 8,000 to 40,000. But we are not part of that. We always question. Now it is 39 today, market has fallen by 300 points. Somebody will ask me, sir, what will happen tomorrow? Who knows what will happen to the market? But only one thing I know, if you are going to achieve towards 5 trillion economy, the market will only go up. That much I know. Whether it will go up tomorrow, next week, next year, after that, I don't know. But the market is capable of going towards 1 lakh also. We don't know how to predict the market, but it is capable of going to 1 lakh also, provided the economy is in good shape, the corporate earnings continue to be in good shape. This is what is here to see. Instead of falling prey to these kind of Ponzi schemes and schemes like that. And another gentleman operating out of gold, you must have read in the paper, that also in Chennai. The gold scheme was operating in Purasavakkam. He was telling, I'll give you interest-free loans to everybody who has got gold. Because people have got lots of gold, they kept everything in the locker, thinking that it is very safe, and they thought it is going to be a great asset multiplier. The gold is in my opinion, it is an unproductive asset. Except it is required for consumption, yes, it is required. But beyond that, you can't buy it and keep it in the locker and then say, it is going to my gold will multiply my wealth. It will never multiply. The last 30 years, it has given me 7%, 7.25% return. The next 30 years, it may give me 7% return. It is a totally unproductive asset only. I don't know about the purity, I don't know how to use it. When I go back for selling and encashing, I don't know. But then people come back and say, sir, in an emergency, I can borrow. So all this man has taken advantage of that. He said, whoever want an emergency money, please come to me. Nothing very far, it is Purasavakkam I am talking. It's all from the paper only. And that man was taking away 70% margin or 60% margin, giving away the loan. He said, I will not charge you any interest because my principle is not to charge any interest. We are very happy. Anything free, people are very happy. So here no wonder, no interest, people went there. We are ready to fall prey to all this. People have understood the tricks. They have understood and they have trained themselves very well. Anything free, they are ready. If I charge 100 rupees, they will not come. But then if I say free, then people are ready to come there. And this chap was collecting money, collecting gold left and right. And he collected adequate, but 400, 500 crore. one fine morning he absconded. Now people are going behind police and these are all happening month after month, year after year, and place after place. But we are not learning anything because it is like Tirupati. New tourism arrives, new people come, new people go. So people are losing money. It's a very sorry state of affairs. Any amount of education is not helping the people. Again and again I am saying you need to pass this information to the people in the household. You must educate them. You have to make them understand. Investor awareness is not just about finding out which stock to buy tomorrow morning to make money. It is about your awareness level. What is happening in the regulation and how preventive measures we should take about and how people are getting cheated. We don't care a bit about all these things. But then we think we know everything. Yes, we know everything. But unfortunately, what we should know, we don't know. That is why we are unable to preserve our things. But I think overall, in my opinion, the budget has done very well. And in my opinion, the economy will grow steadily but slowly. But then you need not question. What is in your hand, you have to question. And instead of questioning the other man, you question yourself. Have you invested correctly, judiciously, and whether you are capable of participating in the welfare and the economic growth of the country, rather than questioning whether the government will achieve GDP of 6 or 7 or 8. That is their job. Our job is something totally different. I once again thank the SARC for giving me this wonderful opportunity to share my thoughts, and thank you so much.
Thank you very much, sir, for that macro overview of the budget and of course touching upon some of the latest trends and people getting defrauded by unscrupulous operators. We will quickly round up, and we would also like to have, in continuation of what we have discussed, we will have a detailed close-by-close analysis of the budget in a few days from now once the fine print is out. We are lining up experts for that. Of course, in the short span of time, all the speakers, Manu Shekhar on direct tax, Vaiti on indirect, and Sir on micro aspects have been very well covered in the short span of time. And we'll go for a more detailed analysis once the fine print is out. That will be informed in due course, maybe in a couple of days. Without the currency of the budget getting lost, we'll do that. May I now request the senior member, Bhaskaran sir, to come and give a medal to our speaker. That we conclude. One more thing, it is too early to announce. This time the SARC conference will be in Cochin. The dates are being finalized. It will most likely towards the end of November. You will get notifications in advance. As the chairman, I would request you to participate in large numbers. Thank you so much. Travel back home safe. Good night to all of you. I had something in Cochin.